Buy now, pay later is a type of short-term financing that allows consumers to make purchases and pay them over time, usually with no interest at all. Using this can be quite convenient, but there are some potential traps that you need to consider. But how does it work? Let's find out. Buy now, pay later programs have different terms and conditions, but generally, they offer short-term loans with fixed payments and no interest. You can use a BNPL app to make a purchase, or you may have a BNPL options through your credit card. With BNPL, you can make a purchase at a participating retailer and opt to buy now, pay later at checkout. If approved, you make a small down payment, such as a 25% of the overall purchase amount. You then pay off the remaining amount in a series of interest-free installments, usually over a few weeks or months. Payments can be deducted automatically from your debit card, credit card, or bank account. You may also be able to pay via check or bank transfer in some cases, although the Consumer Financial Protection Bureau says that most BNPL lenders give consumers no choice but to auto-pay. The main difference between using BNPL and a credit card is that a credit card generally charges interest on any balance carried over the next billing cycle. Although some credit cards offer 0% annual percentage rates, it may only be for a limited time. With a credit card, you can carry a balance or use your credit card line indefinitely. BNPL apps usually do not charge interest or fees, and they have a fixed repayment schedule. You know your payment amounts up front, and each payment will be the same. Let's find out about the pros and the pitfalls of the buy now, pay later strategy through a bit of a case study. As the holiday season was approaching, new payment options were popping up on several shopping sites. It's called the buy now, pay later option, and according to a recent study by Ascend, a personal finance website, more than a third of consumers have used it. The price of a Peloton bike can induce shock for some people, but Chambly Smith did not want to rack up her credit card to buy one. After learning that there was no interest involved, she decided to give the service a try and pay off an exercise bike. The math actually worked out. I could pay off the Peloton bike interest-free in a year, and it was still cheaper than my membership at gym, Smith said. She used a buy now, pay later service called Affirm, which is one of the biggest names in an industry that is growing quickly. People may also come across Afterpay, Klarna, and PayPal Credit. These services come with big perks, like no credit card check to apply with, and they are generally easier to get because they don't charge any interest at all. Most of the time, they are offered when you check out when you shop online, which is convenient for customers. This can be a win-win situation for both consumers and businesses. Angel Competition Bikinis in Lenexa uses a service called Sezzle, and if someone doesn't complete a payment, Sezzle takes the fall for it. For that type of financing, the business pays Sezzle a high merchant service fee on every transaction that goes through their payment option. It covers that for them by around 6%, and the fee is double what the business would pay otherwise. But Kara Jones, the CEO of Angel Competition Bikinis, says it is worth it. In such cases, it is also important for consumers to understand what they are signing up for. A study from Ascend found that 1 in 5 consumers who missed a payment using the service would run into problems. When you miss a payment, a slew of penalties, fees, and interest rates kick in. These are zero-interest loans, but they really work as deferred interest in a lot of cases, meaning that if you default on your agreement, you will have to go back and pay all the interest that would have accumulated. Some companies would charge late fees, and on top of that, if you have stellar credit, your credit score will plummet each time you miss a payment. The buy now, pay later service won't build your credit score, but there are some great alternatives right now that you can try. There are credit cards on the market that offer zero interest for up to 21 months with the ability to earn rewards, which the buy now, pay later service cannot do. Smith said that Affirm was the right option for her, and she was willing to sign on the dotted line again. I'm sure if I saw it in the future, like an appliance or something big splurge that I wanted to do, I would definitely consider it. But just be sure you can make those payments on time, Smith said. As mentioned, buy now, pay later financing agreements allow consumers to pay for things over time without interest charges. And it's possible to get approved for this type of financing even if you have been shut out of other loan options due to a low credit score or a lack of credit history. On the downside, paying off a buy now, pay later loan generally won't help you establish and build good credit, and you will also miss out on any perks that credit cards offer, such as cashback or rewards. BNPL loans do not add to your credit card debt, but they do add up to your personal loan debt. They don't usually affect your credit score unless you fail to pay. Also, if you want to return an item you bought via BNPL, it can get complicated. You should get your money back, but there can be a delay until the merchant informs the BNPL lender of the refund. You may have to keep making payments in the meantime. If you don't, then the payment will be marked tardy or missing, and a possible ding to your credit score. Now, here's the bottom line. If you are considering using a BNPL plan, be sure that you understand the terms and conditions, and that you'll be able to make all payments on time. Consider whether the payments are affordable and what penalties you may face if you are unable to pay. Before you decide, it's worth weighing the pros and cons of BNPL against other options, such as loans and credit cards. Thank you so much for watching, and if you like this video, please don't forget to give it a thumbs up and press the subscribe button to see more of our content. This is Legend Finance, and we will see you all in the next video.